Hello, thank you for staying tuned to my page where I do my best to simplify the practice of quantity surveying. You're welcome to another episode where I shall be guiding us on how to prepare final account statements. So, what then is final account statement? Final account statement can simply be described as a document that details out all the agreed upon amount between the client and the contractor at the end of the project. This same document also serves as the financial closeout of the construction contract, resolving all financial obligation between both parties. And there are factors that determines uh, final account preparations, and these factors ranges from variations, which we all know what variations are. These are additional jobs that would arise during the cost of the construction phase that the client will order the client to carry out for a certain agreed amount. So since these variations are not part of the original contract, it will come in as a positive, as a additional cost to the client. And these variations can either be either omission or addition. If it is addition, then fine. If it is you omitting some items in the bill, which probably the client does not want, or the client wants to change an item for another superior item, which will intend increase or decrease the cost of the project. This also has to be captured. You have the provisional sum, prime cost that has been provided for at the tender stage because those aspects of the jobs were not too clear. So an amount was set aside to take care of whatever additional costs that would arise during the cost of the project. So this provisional sum has to be dealt with. It's either during remeasurement that the full scope of the job have been captured, then the provisional sum will be negated. And if it is, it has to be expended, records of the expense has to be kept for proper accountability. Then you have the claims of different type, which could be either claim as a result of delay in payment. So you are claiming interest for that delay in payment. If it is extension of time as a result of the client negligence, either by providing drawings late and has now changed the track of the program of work that might lead to the contractor staying longer than planned. So that amount that will be agreed upon has to be paid for. So it's an additional cost. Then you have a fluctuation. If it is a fluctuated contract and the client has to pay for the differentials in the price, then all of those has to be captured. Then you have retention. The retention also, this is an amount that has been kept aside should in case the the contractor refuses to carry out uh, repairs on defective works, having written to him based on what the contract stipulate, and he still refuses to carry out, the client is obligated to take an amount from that same figure to cater for the repairs of that job. And upon doing that, the expense has to be kept and deducted from the retention at the end of the contract. So the retention can be paid in full if there are no infractions, or if there are infractions, then some amount will be less from the total retention. So these are the factors that that makes up the final account. So having said this, before I proceed, I also want to ask us not to finish watching this clip without hitting your subscription button. Also, keep your notification alert on so that you can always get any new entry of my video on my page, so that you take advantage of it as it comes. So, and if you are you have been watching me for some time and you are yet to hit the subscription button, please hit the subscription button to encourage us to continue to do that. Then, having said that, in preparing final account, the first thing you needed to do is to gather all the documents that you needed to prepare this final account, ranging from your certificates of payments, all the variation orders that have been issued to you. Then sometimes as the contractor quantity surveyor or the contractor per se, you are obligated to measure the entire project for you to ascertain if the bill quantities are correct. As soon as you've gotten all the necessary uh, detailed drawings, because sometimes you may plan with your bill quantity, and in the end, you might be doing maybe say 15% or 30% more than what it is in the contract. So if you don't remeasure so that you can properly adjust your program of work, you might end up staying longer and probably not making your claims appropriately. So remeasurement has to be done, and if there are extra quantities that you needed to do, you will present all your measurement sheets to the client for him to check, and if truly you are correct, an order will be raised based on the additional quantities. Then it forms part of what you are going to account for at the final account. So on my screen, having given us the background of what the final account entails, let us now do some practical illustration. On my screen, as you can see, I have a summary sheet of the final account, and basically I'll be taking us from one item to another, and also taking us to the sheets that these figures are all coming from, so that we can have an idea on what we are dealing with. As you can see, and also what I want to make us understand is presentation matters. Anytime you are preparing a document, just count it as though this document is going to reach the highest office holder of the land. So, because your presentation can open doors for you, can give you more visibility and more opportunities. So your presentation should be done in such a way that it does not confuse the person trying to analyze what you have done. So you take them bit by bit so that the person knows from where you're coming from and where you're going. As you can see, I have my original contract, which is 341 million. So I go to the bill of quantity. So it is assumed that this is my bill of quantities, and the total cost is 341 million. And after I had done a remeasurement, I have a 60 million addition to the 341 million. And how did I arrive at it? What I simply did is I did a remeasurement of the topsoil excavation. Instead of having the 5,000 square meter that I have in my initial original bill, I had 6,000. So which means I have 1,000 extra topsoil excavation that I did. Then also for the trench excavation, I have a 2,500 as my bill quantity, and I did a remeasurement. I have a 3,000, so there's a 500. These are just figures that I just generated for the purpose of this exercise. Then also I have a 3,005 as against the bill quantity, which is a 3,000. So there's a 500 extra. So I did that all through. As you can see, it is not everywhere that the quantity went above. As you can see in pit excavation, it is 1,500, and exactly 1,500 is what I measured. For excavation, backfilling, it is a 2,000. For backfilling arising from excavation, it's a 3,000. So there are no figures here because the quantity corresponds. Also, I did that all through, and I now concluded. You see, there are areas where the quantities are lesser, like for mesh wire, it's supposed to be 2,000 square meter, which is in the bill, but I eventually measured 1,900. So there's a 100 square meter less. So also here, there's a 10 ton, a 5 ton, and it's a 3 ton reinforcement Y10. And so it is not all positive. There are places that are negative and positive. So I did all the remeasurement. Then the figure I have as add-on is 60 million. And that is what you see in the remeasurement order. I'm having a 63 million, 63 million, which is coming from, sorry, it's supposed to be this figure. Supposed to be this figure, not 63. So I have a 60 million. Then the other one, and that is order one, which is remeasurement. That is after presenting to the client, and the client has ascertained that my measurements were correct, then he raised an instruction that those jobs should be done. So that is what makes it order one. Then order two, the client is now asking me to replace some certain areas within the building with granite tiles as against the rectified tiles that were proposed in the bill. So what I did now was to now go to order two. What I did now is to now add a 300, because the total square areas that I needed to replace with granite out of the 700 square meter that is in the original bill is a 300, and the cost is 25,000 per square meter. Per square meter. So I had said, let's say I had presented the 25,000 for approval, and the client has approved it, that they are good with the 25,000 as my rate for the new item I'm asked to include. So I now did the computation, and I have a 7 million. But because there is a 700 total square area that I'm supposed to tile in the bill, but now I am replacing a 300 square area with granite. So now I omitted that 300 from the 700 square meter tiles. From the 700 square meter provided in the bill as rectified tiles. So, and the bill rate is 8,270. So now I am negating. So my total add-on was supposed to be a 7,860,000, but because I am negating a 300 square meter from the original quantities, so what is going to be additional cost to the client is a 5,248,000 naira, and that is what you are seeing here. Then in the bill, there was a provision of a 10 million. There was a provision of 10 million, a provisional sum of 10 million for additional work at the substructure. But now I have done all my remeasurements. I've done all my remeasurement, taking care of all the works that I actually did at the substructure. Meaning now I needed to negate the provisional sum from the original contract. So that is what I now did here by taking out the original, the 10 million, which is inside the 341 million. So now I now have my total variation as 56 million. And then my claims, I have, these are now, because I did told us that we are going to gather documents for this. So it is assumed that all these documents you see on my, all these sheets you see on this page, they are the document I'm supposed to gather. So this is the fluctuation. My total cost of fluctuation is 20 million. I have for the steel, I have details for the AGU. I have details for the cement. So the total cost here that I have presented with all documentation, and it was agreed, and an order has been given to that effect. So this is the amount, and that is what you are seeing. You are seeing here as my claims. Then interest on delay payment. Also, you come to my payment summary statement. I have this is how I keep my statement. So when the valuation 2 was delayed by 9 days, while valuation 3 was delayed by 39 days, and based on the condition of contracts that had stipulated what are the principles we needed to apply to ascertain what they are supposed to pay me for my delay in payment, I have applied interest, and it is NABOR plus 4, which you usually will get from the CBN website, Central Banks of Nigeria website. You see the daily interest rates, and then you can apply that. Then, as you can see, I have applied that on these 9 days and 39 days. It give me 550,000 naira and a 4,968,000 naira, giving me a sum total of 5,518,000 plus some fraction. That is what you're seeing here. Then short payments. What are these short payments? Say when I present my certificate, instead of the client to pay me the full amount he has prepared, he has approved, maybe the check that I'm going to receive from them will have some differentials between what I am supposed to pay and what I was paid. So this is where I now kept, like, this is the total amount paid, and you are seeing the differential. Say for this valuation, I have a 500 naira different from what I was actually supposed to pay. This I have a 1,000 naira different. Then this I have 100,000. This I have 2,000 more than what I was supposed to pay. So when you sum up the money, you're going to get a 99,500 naira. And this is the 99,500 naira. So the total claims is 46 million and some fractions. Then my revised contract sum will now stand at 443,448,000 as against the original contract of 341 million. So now, after getting you've accounted for all the orders and the works you have executed, you now come and now deal with payments. You can still take payment in the same order. The total amount that has been paid to you net, excluding taxes, is 324 million. And where are the details? The details can be found in your payment follow-up. These are all the payments that were the certificate that were raised and was approved. And these are the dates that these are the date that it was submitted, the days that you got the payment and all of that. So the figure is here. The figure is here, 324 million. So the variation orders were also paid, 66 million. Then the claims were also paid, 45 million. So the total amount that was paid to you was 436,292,000. So the balance payment from the revised contract and payment made so far, total payment made so far is 7,155,000. Then you now bring in your retention. Your retention from your analysis, total amount deducted, which is 5% retention, is 17 million. So you are bringing it down here, and this is to be released after defects liability period. So by the time you sum up the balance payment from the original, from the revised contract and the payment made, plus your retention, the balance that is due to you as the contractor is now 24,211 naira, 928, 211,928 naira 10 kobo. So this amount is what is now owed to you by the client after all these documents have been presented and this final statement agreed and signed up between the two parties, agreeing that this documentations that were done between the two parties were all correct. Then these figures will now be paid for you, and the project is now closed, and everybody lives happily. I believe I've been able to help us understand some things that we were struggling with, and also increase our knowledge on how to prepare final account and what final account stands for. If this has been able to help you improve your knowledge on preparation of final account, please leave a comment on my page. Above all, share, and see you on the next episode. Thank you and bye for now.